Hey traders, thanks for stopping by here. Taylor Carver here from thetradinganalyst.com. We're going to get into some charts right away. So first and foremost, we're going to be covering the S&P 500, and I want to start kind of from a longer term picture, and then I'm going to kind of boil it down into the more near term action that we're going to see that's going to help you profit from the market this coming week. So it's important to look at it from a broad picture. I'm going to cover this briefly because I've covered it quite a bit in my previous videos, so just to kind of make you aware of that. So here's what we have. Let me see if I can get rid of that. Okay, so first and foremost, the reason we've been bearish on the market, okay, for a while now, for over a month, is because of this major level here. We had this previous all-time high that we made back here in January of this year. Okay, we broke over it right here, and then we broke right back under it, okay, making this a false breakout, okay? The other thing that I want to kind of mention too is that we took all of this time, okay, from February all the way up to October to get all the way up here, okay? And then just within a couple of weeks, we sliced back all the way to right where we started, pretty much, okay, in just a couple of weeks. So to me, that is not a very bullish behavior, okay? It's not a very bullish behavior. So in addition to kind of the things that I'm mentioning here in this video, I also look at all of the components of the S&P 500 and the Dow Jones and the NASDAQ. And I'm telling you that just by looking at all those charts, I'm telling you not a lot of charts look great, okay? So everything is lining up. We've got the major movers like Apple and Amazon and Google and Netflix and Facebook all not really looking great, okay? They're not looking great, and they don't look like they're bouncing anytime soon. So we had that false breakout, all right? We had to slice back to these lows, all right? We had a in the near term, we're making lower lows and lower highs. Okay, here's a high, lower high. I guess you can call that a lower high too. Here's a low, lower low, lower low right here. So we're in a downtrend here for the last month and a half as well. All right, so we've got that. Now I want to kind of zoom into the more recent action right here. Move my face a little bit. So here's what I want to kind of go over, okay? What we had here is a gap up, and you can see that never really materialized. It kind of failed, all right? You can see we had a gap up here, and that kind of materialized for a nice little bounce. In fact, we called for a bounce from this gap up right here. We had this other gap up too, but as you can see, it failed. It headed lower. We still had a chance in this area, but on Wednesday of, was it Wednesday of last week? Let's see, what was this day? The 20th, whatever the day that was. So the 20th of November, we had this gap down, okay? So when we have a gap down, that makes this kind of an island reversal pattern, okay? And it kind of does away with the bullishness that this gap up created, okay? We had to hold this gap up level. It's okay that we came down here and we filled it, you know, but closing below it and gapping below it, that is bearish, okay? And then the other thing I want to mention is we had a gap here, and we didn't even have any kind of a break of this high or a reversal candle or anything like that. We just gapped down, traded sideways within that range on this day, and then on Friday we had a gap down and a close pretty much at the lows right here, which actually closed us below this support, all right? So when you have a gap down and when you have another gap down, you're getting a continuation of that move, all right? So we're most likely going to continue lower. That's the trend that we're currently in, okay? So the other thing I want to kind of mention too is that a lot of people have not really seen or been involved in a true correction, okay, or dare I say a bear market, All right, I don't care about the terms and how you call it, but let's just talk about stocks and ETFs heading down. Okay, I want to show you. I want to kind of back this up. Okay, let's go back 2 years. All right, and do you see how on the way up it just looked like it couldn't be stopped? All right, it couldn't be stopped, especially this action right here. Okay, I mean, we barely had any red days. All right, we barely had any red days. That was a very huge move up with barely any downside. There was just one day that we broke below the 20-day moving average at this point in time. All right, and a lot of people were screaming during this time, you know, stocks are overvalued, yada, yada, yada. It didn't really matter. Stocks just headed higher, okay, with force, right? And obviously, you know, a year later, we're back down to these levels. But during this time, you could have been profiting, you know, the whole way up, okay? And my point here is that stocks can behave irrational, okay? Or, you know, I like to use quotes because nothing is irrational, okay? This is totally normal behavior for stocks, all right? And you think, oh, it can't go up any higher, it can't go up any higher, and it just keeps on going. So, and this is very anecdotal and, you know, not very technical, but I just kind of want to prepare you guys because this is what could happen to the downside, okay? Stocks can head lower. Stocks don't have to bounce, all right? We've been accustomed, especially in the last 2.5, 3 years, that stocks just keep on heading higher. Even when we get a little dip like this, it just bounces and we head higher like that, okay? I'm not saying that we are going to do this, but I'm just saying you have to be prepared. And if you're getting short signals, like I'm getting right now, like I mentioned, that support break, the gap down, another gap down follow through, I'm currently like 90% short at the moment. And it's because we're getting those short signals, okay? It's because we're getting those short signals. And I want to go over kind of the support where I think that we could head. I definitely think we're going to at least tag these support levels that we bounced at previously this year. All right, so we'll probably take some kind of a pause when we get to this level, and it's right around, if you're looking at the SPX, 2580. Okay, I think we'll pause there for a second, and then we'll kind of see how it reacts. But as it stands right now, lower lows, lower highs, gap downs, power gap downs, follow through. You know, this is bearish behavior, and we're seeing it not just on this ETF, but we're seeing across the board on individual names that are out there. So definitely be aware of this, guys, and do not think that the market has to bounce. Okay, wait for a bounce signal. That's what I'm going to be doing. I'm definitely ready to be playing the market to the upside if we get some kind of a bounce signal, and if I see a lot of the major stocks like Apple and Amazon and Google showing some signs of life. But as of this moment, as of this video, I'm not seeing that, so I feel very comfortable on the short side. So that's what I got for you guys. Hopefully this video helps you out a lot. As always, if you have any questions about this video, please let me know. We have a free 14-day trial going on right now that I highly, highly encourage you to sign up for today, because we never do a free trial. Okay, we never do a free trial, and we're doing one right now. So if you've been struggling in the market, okay, especially right now is a big time in the market where you have to either know what you're doing or be attached to someone who knows what they're doing. And you can do that by joining here with our free 14-day trial. We know how to make money when the market goes up or down, both ways. It doesn't matter to us. We have the tools to do it. So I want to invite you to join that free 14-day trial, and also show you, I'm going to move my face a little bit, show you that we are different. Okay, there's a lot of services out there. I totally get that. Most services haven't been around as long as we have been around. Been around for 6 years. The reason we've been able to do that is because our clients are happy and they're making money, and we're able to come out of situations like right now in the market where it's choppy and it's heading lower, and we're actually making money and profiting, and so are our members. All right, so what you're going to get when you join is easy to follow trade alerts with 100% profit potential delivered directly to your cell phone in real time. We trade mostly options. Here are a few of trades that we've taken recently. If you were a member at that time, you would have been able to take those trades. You can see what our customers are saying with our testimonials, and you can join right here. And the other cool thing that sets us apart from other services here is that you're able to get our real-time portfolio tracker feature. And what that is every single trade that we place is plugged into our real-time portfolio tracker, and you're going to be able to see every trade that we've made in the past and every trade we've made just recently, and you're going to be able to see how profitable are we, how profitable are you alongside us, and you're going to be able to see complete transparency. We don't hide anything under the rug. Our wins, our losses, you're going to see it all, and you're going to be able to watch your account grow next to ours. All right, so I highly encourage you to sign up for that free 14-day trial. Again, we are not doing this special offer ever again, so I strongly suggest that if you're at all interested, come and check us out. Come and see what the service is all about, and I look forward to seeing you in there, and I hope you make that decision to become a better trader. And I look forward to seeing you in there and helping you along your journey.